Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for August 18th, 2014. We have had some significant developments in the market since last week, and I would highly recommend, in fact it should be mandatory, that all members and free trial subscribers go ahead and listen to my video cast from earlier on last week. Specifically the video cast from the 7th and the 11th of August, when we were hitting the 200-day mark, 200-day moving average, and it looked like the meltdown was going to continue downwards till I highlighted some very significant inflection points and pattern symmetries that was very similar to what was going on the first couple of days in February, specifically February 5th. February 3rd to the 5th, right here. So let's go ahead and take a look at the Dow Jones Industrial Average. Let me highlight it. Let me just point out a couple of extraneous factors that have led us to this juncture we are at the market right now. We had an absolutely phenomenally volatile and tumultuous day on Friday. We had news come out of the Ukraine that possibly there was a full-blown war between Ukraine and Russia, which in hindsight looked like a completely fabricated, manipulated story. The market dropped, and the market dropped very suddenly, and we basically did a reverse turn from being down close to 200 points to ending the day, I believe it was minus 50 or so. Despite all that volatility and the extreme short covering that took place at those levels, the charts were quite mixed going into the close on Friday. However, they resolved themselves to be sharply on the upside as we open for business today on Monday. There are many questions that are never answered in the market, and Friday's action was one of them. In many times when we see those type of waterfall declines, it's always good to have a small hedge because we don't know what's going to happen over the weekend. However, you always need to have some sort of long exposure if the primary trend remains to be on the upside, which was the case. So what happens is you make very decent money on your long exposure, and then you have the hedge in place just in case things go wrong. You obviously make some money on the downside. Saying all that, that's exactly how the game was played out today. We had a very strong day. We had very strong winners, and it looks like the pattern symmetry that I highlighted very clearly on the February pattern symmetry that I showed very clearly earlier part of last week is now coming into play. Saying all that, I want everyone to review the old videos because then you can build a storyline and you can see how clearly a lot of my forecasts come into fruition. So at this point in time, let's take a good look at the Dow Jones Industrial Average and see what the short-term forecast would be. So here's the Dow Jones Industrial Average going back to November 2012, the long-term trend line, or intermediate to long-term trend line, from this level. You've seen this many times, as I've shown it clearly. And this is what happened. We came down, we tested the 200-day moving average, and we bounced hard. It's a very simple pattern symmetry. Let me get my drawing tool here to this, which was see, now all in hindsight everything makes sense, right? So we had very deep oversold conditions, and then we had a rapid bounce, keeping the uptrend intact, and now we're basically kissing the 50-day moving average here, exactly where we were. I did say that we would, at that on those videos you'll see, I believe I said we would go back and retest at least the backside of the 50 and the 34-day moving average, and that's exactly what happened. Okay, that's exactly what happened, and that I had mentioned was going to be around 16,847 or 16,840. Well, lo and behold, No magic. That's exactly where we were on where we went to today. So at this point, let's take a closer look at what's going on. We can clearly see the same thing happened here. We went and continued. Actually, there was a pretty sharp turn. So if that happens, we are going to basically go like this, and at that point we're going to hit about 17,250 and test all-time highs. If that's the same pattern symmetry that's going to play it out. So far, that's pretty much what has happened, as you can clearly see. Similar to here also, and we don't really get overbought, fully overbought, till we get to the top of the Bollinger and the acceleration bands. Bollinger bands being around 17,250. Okay, so we still have quite a bit of room to move. We have another 400 points to move. It doesn't happen in a straight line, so let's take a look at a short-term chart to gauge what's going on. So here is the shorter-term chart here, and this is what I wanted to show before, which clearly shows the power of pattern symmetry. And a lot of my, and this is again part of my work that has been very successful over the years, and again, it's repeating itself. So let me show you what happened here, talking about pattern symmetry. Okay, let me get the drawing tool out here. So we had this massive waterfall decline, which took the Dow down from 17,000 and change all the way down to 16,325, almost a 700-point drop. Okay, so now guess what we're doing? It's not rocket science, keeping it very simple. We're basically retracing this path. Where does this path basically come to fruition? It basically comes to fruition again at around the 17,000 plus level. So in simple English, we got another 200 points on the Dow that we need to bridge before we get fully and completely overbought again. So, you know, this move here. Now, will this move happen in one straight line? Personally speaking, I don't think so. But I don't think it's going to be that long won't be that long for us to get there. So this is what I think very well might happen. We get towards the 16,875, give or take another 50 points. Then we back test this if pattern symmetry is going to play out exactly the way it is. And again, there's no steadfast, hard, fast rules that that's exactly what's going to happen. I'm just showing you. After all, algos are programmed by humans, and human behavior never really changes. At a point of maximum pain, at a point of where most of the stops are triggered in the markets, that's pretty much where the inflection points are. So let me just show you quickly what I do expect might be going on. The Dow could very well come down and test. We overshoot up here. Let me try to draw this straight line. So let's say we get towards another 50 or 60 points up here to the top of the Bollinger. Then we pull back, and then we make a high. I believe we get here 17,000 and change. I believe this happens in short order as we get into the the latter part of the month, or even sooner. We have some very pivotal events that are in place for this week, including on Friday when Mario Draghi speaks, including on Thursday when we believe we hear from Janet Yellen from Jackson Hole, Wyoming, where all the central bankers meet. I've talked about this before. And I believe they're going to keep the accommodative stance very much in place. And there were some pretty significant articles that were out today talking about the fact that they will keep interest rates. They will not announce, but they will basically stick to the position that regardless of improvements in the economy, they will keep interest rates low for the foreseeable future and much longer than what the market expects. So saying all that, is it possible that we get to new highs? It very much is possible. Okay, so again, we want a little retracement, a little bit back and forth before we move up towards those levels. And of course, if we break below these levels again, let's say 16,675 or so, we're going to come down and test the lower levels of where we were before. And that's always, the downside is always there. We already know that. Anything can happen. Let's move on to the different charts.